D-Street gained some pace after a quiet start with the benchmarks above 24,100 mark while broader indices lagged. It's a mixed trade across sectors with pharma buzzing on the back of news and FMCG and metals holding out. IT, auto and oil and gas see some pressure.
Former Chairman Nathu Chakrabarti tells ET Now his resignation letter contained no allegations and was intended solely for the board's introspection. His remarks come after the bank's legal review found no material governance lapses or evidence supporting ethics-related concerns.
Shares of Kotak Bank declined after CEO Ashok Vaswani announced he will step down when his term ends in December, citing personal reasons. The bank has begun the succession process, with management stating that growth and strategic priorities will remain unchanged during the leadership transition.
Shares of Persistence Systems declined after announcing a 1.3 billion euro all-cash acquisition of Nagarro. While the deal significantly expands Persistence' European presence and digital engineering capabilities, investors remain cautious over integration risk, bridge financing and the potential impact of Nagarro's lower margins.
PFC REC share, the mega merger details. The proposed swap ratio implied a premium for REC shareholders based on the current market prices. REC trades at a discount to its implied merger value, creating a potential arbitrage opportunity.
Dr. Reddy's gained after successfully completing a pre-license inspection at its biologics facility, while UPIN received tentative US FDA approval for oral anti-androgen medication. Meanwhile, Vikram Engineering rallied after securing a 3,500 crore EPC order for a solar project in Maharashtra.
Hello and welcome. You're tuned into Buy Now Sell Now. I'm Ankita Saxena and with me is Kavita Thaplayal. In the next 1 hour, we'll get your stock-specific questions answered on the show by a fundamental guest and a technical analyst. Start writing into us. The number is flashing on top of your screens and the QR code is also flashing. So you can tune in and write in your questions and we'll get them answered. But before we get going with the show, let's take stock of how the market is shaping up at this point. Well, a very quiet day that's coming in, at least as far as the large caps or the frontline indices are concerned. Nifty right now absolutely flat, sitting at 24,066. Flat moves coming in on Nifty. Nifty Bank also, similar moves, very flat moves coming in right now, though it has slipped into the red. It is trending towards the lowest point of the day as of now. But as far as the broader end of the market is concerned, that is seeing drubbing. In fact, the small caps are trading down 0.5% and the mid caps also trading down with cuts of 0.4%. So it's the broader end of the market that is seeing some drawdown in today's trading session. But a couple of pockets that are shining, Nifty Pharma being in the green. It is trading with gains of 1.8%. Dr. Reddy's, Ajanta Pharma, Torrent Pharma, Cipla, Lupin, all of them trading with gains of more than 2.5%. Now remember, there was a lot of news flow that came in over the weekend as far as these pharma names are concerned. There were some observations, some US FDA approvals coming in. Dr. Reddy's lab is trading up 4% on account of that. So it's the entire pharma packs that is really holding the market steady right now. And on the back foot, we have Nifty Auto and Nifty IT that are trading with cuts of almost 1.5%. So largely that is how the market is shaping up right now. Advanced decline ratio is tilted in the favor of declines as of now, Kavita.
All right, so that's a quick market check, but then let's get connected with our experts and let's start taking up your stock-specific questions as well. We are joined by Jigar Patel and Gaurang Shah, our expert on the show. Hi, good morning, gentlemen. Welcome to the show. And Gaurang, let me come to you first before I deep dive into our viewer queries. Let's just get a sense of the Monday and the market trajectory so far.
Well, thank you so much, Kavita, for having me on the show. Good morning to all the viewers of ET Now. And to all of you all, a small disclosure, all recommendations that I'll be sharing with you this morning on the show, Kavita, they are part of our fundamental research team recommended from a long-term point of view. Our company, Georgette, or myself, do not have any kind of personal investments, no financial interest, no conflict of interest, but we share similar investment ideas with our clients. They might have their investment interest. So it's going to be, it's been a flip-flop, Kavita, since the morning we resumed trade, but the good part is that we are able to keep ourselves in the green trajectory. We started on the positive note, then slipped in the red for some time, and then again we have recovered and we are managing that. The view that we put out this morning on Nifty spot, if you will. 2 levels on the lower side and 2 on the higher side. And the bias, Kavita, we think this week is going to be positive, and possibly if we are able to take off 24,200, 24,300, then that march towards 24,500 cannot be ruled out. And we've been successfully able to safeguard the lower level of 24,000. Of course, last week we did manage to slip below 24,000, but we again recovered. So looks like there should be positivity. Any close about 24,200 to 24,300 will give us a little bit of more opportunity on the higher side. Having said that, I think stock specific and sector specific news flows will definitely be hogging the spotlight. So you need to be aware about that as well.
All right, Gaurang, let's move on and get going with the first query that's coming from DJ Rao, who's writing in from Hyderabad. He says he has Abbott India, 50 shares, the entry price is 26,125. Should he hold or book losses? He wants to exit the stock and perhaps invest somewhere else. What are the suggested sectors? Gaurang, I'll come to you. Abbott India, he's sitting at a loss here. What should be his strategy? And if he exits, then where can he park his money? What are the sectors that perhaps he should be looking at?
So, Ankita, I feel there are a couple of sectors. Honestly, in this whole, geopolitical situation, there are sectors which have been able to, I would not say safety shield, but relatively less impacted with the negativities. And those sectors are primarily, I think, defense, healthcare, pharma, to a certain extent, power generation, cellular service provider companies. These are not directly impacted. They are impacted, but not directly impacted with what's happening around the globe. And of course, the domestic unfortunate deficit rainfall that we've had. So if I had to pick one particular space amongst these sectors that I've just listed down, then I think pharma would be something that you should definitely look at. And there is a lot of opportunity in terms of what is happening across the globe. And as we all know, India is the pharmacy to the world. So, and of course, there are a lot of opportunities. Either it is CDMO, APIs, generics, biosimilar. One name which has been consolidating for a long time and now is preparing to take off on the fundamental side from a long-term point of view is Cipla. So if you feel that your investment is not working out in Abbott, then you can look at Cipla. I'm not giving any specific call on Abbott because we don't have coverage.
All right, we do have a caller as well now connected on the phone line, and this is Sahana from Tamil Nadu. Hi, good morning.
Good morning. Can I proceed?
Yeah, sure. You can ask your question.
I hold 120 shares of Latin View at average price of 270. Shall I average it or book loss? I can wait for 2 years.
You can wait for 2 years. Okay, sure.
I can. Another one, Mahindra Holidays also. I hold 100 shares at 275.
275 Mahindra Holidays. Shana, what's going to be your time frame in? Sorry?
2 years I can.
2 years again.
2 years I can.
Okay, all right. Gaurang, I'm not sure if you have these stocks in your coverage, but since it's a long-term view, would you want to recommend something on both of these counters, Latent View and Mahindra Holidays?
So, Kavita, of course, we don't have coverage on either Latent View or Mahindra Holidays, but with Latent View, I don't think there is any peer comparison, according to my knowledge, which is available to do any kind of peer comparison. Now, if she wants to make a move from these two names onto something else, then as I was discussing with Ankita, that there are sectors which are relatively insulated from what is happening across the globe. And if I have to pick one name in the defense pack on which we have a positive coverage for a pretty long period of time, that is Bharat Electronics Limited, BEL. So she can possibly look at this. As far as Mahindra Holidays are concerned, again, no specific comment since we don't have a coverage. But something in the banking looks quite attractive. And with that view, if I have to name one particular bank in the private sector, then Federal Bank, which has been performing quite well, Kavita, even if you compare on the earnings front, visibility of future earnings, etc. There are better sectors and there are better names to be in. No specific comments on these two names since we don't have coverage. But yeah, you can, if she wants to switch, she can possibly have these options open.
All right. So if it's a switch, they're the options recommended by Gaurang. But Jigar, I'll come to you. What's going to be your take? 270, the buy price is in latent view, and then Mahindra Holidays 275, and time frame is for 2 years. But what's the trajectory like, if at all you want to give a stop loss for a short-term trade or an exit in medium term?
Very good morning, everyone. See, first of all, in the Mahindra Holidays, we already had a massive correction almost from the top of 510. We had a low of 200, 210 in current month. So exactly, the current price action suggests 50% of the retracement right from the COVID rally, and this particular levels aligns with the previous breakout zone also. So on weekly chart, again, there is a bull divergence visible. So I would recommend as of now hold, and she can even add at this particular level, keeping a stop loss of below 205 on daily closing basis on Mahindra Holiday. And overall, see, first target, I'm expecting at least 300, 310 by 5 to 6 months. In terms of latent view, see, latent view currently, if we look at daily chart, there has been a very sideways choppy move from 335 till overall 280, 275 zone. So as of now, the wait and watch in latent view and keep a stop loss of below 275 on daily closing basis.
Right. Let's move on then. That's the view on latent view, but let's move on to the other one coming in from Mahalakshmi from Hyderabad. She says she has Trent, 12 stocks, and the entry price is 2,930 rupees. She wants to sell and invest in Arvind Fashions, I believe, for the long term. Please advise whether it's okay or not. Coming to you, Gaurang. Trent is what she's holding on to right now. She wants to sell that and get into Arvind Fashions. Would you recommend that? Would Arvind be a better bet than Trent?
Ankita, I feel that Trent is a better tape, and as a disclosure, we do have a positive coverage on Trent. On Arvind, I won't be in a position to give specific comments since we don't have a coverage, but Trent has now started to implement what the company has guided for in terms of opening up stores, not only in metro tier 1, tier 2 cities, but also in lower down tier 3, tier 4 cities. There was concern in terms of guidance that the company gave for earnings, but all that thing is in the rear view mirror, it is past. My sense is that the new store addition will help not only improve the presence of both Westside and Zudio to a greater extent, but also cater to a large audience in terms of customer base. If you're a long-term investor, continue to hold Trent.
Long-term investor, you are advised to continue to hold on to Trent. Let's move on. This is a question coming in from Mr. Patel from Bangalore. And AWL Agri-Business, entry price is 389, and the future of this stock. Let's just get a quick tech check from Jigar on this. Jigar, okay, so the buy price is very high, 389. He's in deep losses. What would you recommend?
See, currently the structure of AWL is extremely negative. Even on weekly chart, the price is below 20 and 50 EMS. So I don't think any immediate reversal is seen on chart. So as of now, definitely a stop loss can be kept below 170 on weekly closing basis.
All right, let's move on to phoner then, live phoner that's joining us. Mr. Kannan is joining us from Kerala. Hi, good morning, Mr. Kannan. Thank you so much for joining us.
Yeah, hi, good morning to all.
Mr. Kannan, go ahead, ask your question.
Yeah, I have two queries. So one is regarding sale. So I hold 400 shares at an average price of 196. This is a short-term buy for me, but I would like to know if it is a good level to average down now. And second is regarding GPIL, Godavari Power. I want to buy this for long term, and I would like to know if it is a good time to accumulate.
Okay. Okay, this one is for you, Jagadan. He wants to know the entry price for Godavari, and also he wants to know about sale. You want to know if what should be the strategy for sale, right? It's for the short term. Okay.
See, in terms of sale, there has been a massive correction from the top of 210, and currently the price action is sitting somewhere near the previous breakout zone. Even the RSI has made hidden bullish divergence. So as of now, definitely it is yes to average at this particular level, and we expect to continue the uptrend at least till 210, 220 within next 4 to 5 months in sale. Whereas in GPIL, Godavari Power, as of now, there has been wait and watch kind of stance, because currently the price is trying to make lower low structures because on daily chart, even there is no sign of divergence. So as of now, wait and watch in Godavari Power. And as of now, 250 would be a SL on daily closing basis.
All right, so that's a technical check on both of these counters. With that, it's time for a short break. You keep sending us your question. We'll be flashing the QR code. Scan the QR code, send across your question on the WhatsApp number you'll be connected to. And we'll see you after the short break.
Welcome back. You tune into Buy Now, Sell Now. It's a show where we get all your stock-specific questions answered. The number is still flashing on top of the screen, so you can keep writing into us, and we'll get them answered by our experts, Gaurang and Jigar, who have joined us. Let's move on and get Summer Day's question, who's writing in from Guwahati. He says he has Lloyd's Engineering. The quantity is 1 lakh shares. The entry price is 13 rupees. Wow, he's sitting at a huge profit there, holding on for the last 5 years. What should be the strategy now? Coming to you, Gaurang. Gaurang, he's held Lloyd's Engineering for quite a bit, and he's sitting at a really good profit. And even Lloyd's Engineering, if you look at the performance, it has been a clear outperformer. It has outperformed the market. Do you see this outperformance to continue? Can he hold it for longer, book partial profits? What should be the strategy?
Ankita, it's very difficult to give advice on this one because we don't have coverage. Point number one. Point number two, you got in at 13 rupees. You have 1,35,000 shares. Yeah. And the stock price is at about 86 rupees. You know, Ankita, you should use common sense and wisdom in stock market. The kind of return, multifold return that he's getting, of course, I won't give a straight away buy, sell and hold. But the kind of returns you are making, you should look at that. And you should always safeguard your capital and book some profits regularly. And at least bring back home your capital and maybe 15-20% of the profits on top of that. Because you got 1,35,000 shares, even if you sell maybe about 10,000 or 15,000 shares, you are at home. And then rest of your investment is of zero cost. I will not give specific buy, sell and hold because we don't have coverage. But I think greed should be kept aside and you should take what the market is giving you.
Gaurang, point taken. Though you don't have coverage on Lloyd's Engineering, but at least a profit should be taken, or at least the capital should be taken out at this point where he's sitting at such a huge profit. But Jigar, let me come to you. We'll give some levels at least to Summer to get a sense of what can be the further upside. Though profit booking is absolutely something that he should be looking at, given the considerable returns that he's sitting on.
See, definitely in terms of Lloyd Engineering, currently the structure is very bullish. No doubt we had almost bottom of 38 in the month of March, and currently we had a top of 92 approximately. So as of now, we will don't try to guess the top or try to assume where will be the top. But see, overall the 80 level would be a very critical. So I would suggest him to keep a trailing stop loss of 80 and keep, trail the stop loss as the stock moves upside.
Right, so that's the advice. But then, yes, do try and consider part profit booking strategy so far because you've really accumulated, and congratulations for all the profit. But let's move on. This is a question coming in from Meher Khanna from Vishakhapatnam. I'll take this question from both of you. Gaurang, Meher wants to invest 1 lakh in each entity of Vedanta for 2 years. Would you recommend that? And Jigar, I'll come to you for the buy price.
Well, so Kavita, this is again a difficult one because we used to cover Vedanta when it was a consolidated company. Right. Very recently, the company has hived off different businesses and listed them as a separate entity. As a candid disclosure, when it was a consolidated entity, we had been maintaining a positive stance, and we were of the view that once the entities which the management has decided to hive off and list as a separate entity, that move will unlock value, and it has definitely created value unlocking proposition for all the investors who were holding Vedanta before the split. As of now, the parent company Vedanta Limited is something that we have a positive coverage, and as a disclosure, we do have a buy call on Vedanta Limited. On other listed entities, my team is working on it. will need some more time to possibly come out with ideas.
All right, Gaurang, Jigar, what's going to be your take now with any buy price recommended?
I would be able to give a recommendation only on VDL because there is data available on this chart only. Even in aluminum and other company, there are lack of charts. So as of now in VDL, current price action is 275, and we are expecting a further pullback till 260, 265, which is a breakout zone and consolidation zone exactly from 2023. So at this particular level, we are expecting further consolidation, and overall the uptrend will resume by 3 to 4 months. So overall the buy price would be somewhere between 260, 265 odd levels, keeping a stop loss of below 250. And overall we are expecting a bounce back till at least 380, 390.
All right, so that's the view coming in on Vedanta. But let's move on to a live caller who's now joining us. Swaminathan is now joining us from Bengaluru. Hi, good morning, Mr. Swaminathan. Thank you so much for calling us today.
Yeah, good morning to all of you.
Yeah, tell us your question, Mr. Swaminathan.
Yes, yeah. I have a question on Transrail writing. And I purchased 250 quantity at 785. And it's a loss now. So I just wanted to know what will be the period for, I want to hold for at least 2 years. Is it a good time to still accumulate or just hold on it to that? This is my question.
Okay, Transrail. Gaurang, let me come to you first on this. In fact, just today, Transrail has come out with a big order win of 460 odd crores. But in the future, Gaurang, do you see him recovering his price? Because, in the last 1 year or so, Transrail has been in a consolidative phase. I mean, in fact, it has been consolidating for a while. Do you see any recovery coming in on Transrail? What should be his strategy?
So, well, Ankita, honestly, again, no specific comments on Transrail because we don't have coverage. But let me give a little bit of word of advice, if you will. You bought in at 785, almost 800 level, and the stock is trading at about 515 or 520. In terms of percentage, you've taken a large hit on your capital itself. So first question is whether you will be able to recover your capital. And for the capital to recover, the company has to do phenomenally well to recover the kind of percentage loss that the company is suffering. And for that, the company will have to do, fantastically well to come back to those kind of levels of 750, 800. No specific comments since we don't have a coverage, but there are better names to look at compared to this company.
Okay, Jigar, I'll come to you. What should be the strategy for Transrail? Gaurang has, of course, given his verdict, but what do you suggest on the charts?
In Transrail lighting, currently the stock is trading in a broader range of 630 till 470 roughly, and currently we are almost at the lower end of this range. But the good thing is that on balance volume on daily chart, currently the volume is picking up, the net volume is picking up, so which is a sign of bullishness. So as of now, definitely the buy on dip till 500 or even 490. So 490, 515 would be a buying level, keeping a stop loss of below 480, and overall again we are expecting a bounce till the higher level of the range, which is 600, 620.
All right, let's move on. This is a question coming in from Mr. Ganesan from Chennai. And Jigar, I'll come to you. He wants to know about eMudra. Entry price is 460. What will be the medium-term outlook, if at all you have any?
In eMudra, currently again the price has reversed from the historical level of 2023, and currently we are into a pullback mode. So as of now, in terms of RSI, again we are trying to make, there is a bullish divergence, but as of now the bullish divergence has not taken out the structure of the chart. So as of now, unless until 490 is not taken out decisively on daily closing basis, the buy would not be recommended here. As of now, wait and watch and keep a stop loss of below 420 on daily closing basis.
All right, let's move on then to the next question coming in from Mr. Lokesh, who's writing in from Hyderabad. He says he has Lumax Autotech, 50 shares, entry price is 1,734, the time horizon is 6 months. Should he hold or average in? Jigar, coming to you, Lumax Auto, he's sitting at a loss. Should he book his losses or should he average in, and what are the levels to watch out for?
See, currently in Lumax Autotech, there has been definitely a top formation on weekly chart. So we are expecting a further decline till at least 1300 or 1330 zone, which is lower almost 150 points from current levels. So as of now, definitely a stop loss should be kept below 1450 on daily closing basis.
Okay, let's move on. This is Mr. D. Mazumdar from Odisha, and IEX is the stock. 245 is the buy price. Where to invest to recover my loss? Okay, so let's get your take from Gaurang. Gaurang, you have it under coverage?
Again, a classic case of 50% down, Kavita, on the capital. See, this is what exactly I'm trying to say. When you don't take appropriate steps at the right time, and if you let your capital erode 30, 40, 50, 60% or more, then the big question is whether you are able to recover your capital. And Kavita, there are a lot of news flows on this particular company in the public domain for you to realize and take appropriate step much earlier. Having said that, we don't cover these kind of companies. I won't be able to give any specific buy, sell, and hold. If you want an alternative investment idea, maybe in a different sector, then we are near about these levels from a long-term point of view and a possibility of minimizing the loss. Then you can shift to Ashok Leyland from the auto pack, and this company looks quite attractive in terms of future growth. Ashok Leyland.
All right. So as far as the question about recovering the losses, Ashok Leyland can be a good buy at this current juncture, according to Gaurang. But then, Jigar, what's going to be your advice on IEX?
See, for IEX, we had a massive fall from the top of 212 approximately. But overall, see, if we look at the daily chart, the 200 exponential and even simple moving average are trying to go sideways as of now. So I'm not expecting a further fall in this counter, but for a safer side, below 120, definitely a stop loss should be kept on daily closing basis. But the major upside would be only seen if there is a closing above 140 on daily closing basis. So as of now, wait and watch and keep a stop loss below 120 on daily closing basis.
All right, let's move on then. This is Smita who's writing in from Bengaluru. Smita says that she has quality volts, 350 shares. The entry price is 25 rupees, and she had bought 350 shares of 25 rupees is the buying price, and she wants a short-term view. Please suggest if she should continue to hold book profits at the current price. Coming to you, Jigar, quality volts. She wants to know for the next 6 months, perhaps, what should be the strategy with it?
See, definitely the hold is a recommendation because currently it made a top of 40 approx, and currently we are holding above 20 exponential moving average on daily chart. So the stop loss would be kept below 34 and keep holding this stop.
Okay. Okay, let's move on. Let's take this question by Mr. Raghuram from Chennai, E2E Networks. And Jigar, I'll come to you once again, 315. But then he wants a technical as well as a fundamental take. Gaurang, would you want to go with a fundamental take on this first, E2E Network?
I'll give it a pass to Jigar, Kavita. We don't cover this one. I'm sorry.
All right. Jigar, what's going to be your take?
See, as of now, there is a double top formation on E2E network along with bearish divergence. So definitely buying is not advised. If there is some profit at this particular level, then definitely one should go for locking entire profit and stay away from this counter, because the kind of structure it is trying to make, we may see at least a pullback till 335 or even below that within next 1 or 2 months.
Right, so that's the view on E2E Networks. But with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll come back and get your questions answered on the other side. Stay tuned.
Welcome back. You're watching Buy Now, Sell Now, last leg of the show where we're answering your stock-specific questions. So do not delay. Send across your questions on the WhatsApp number that's flashing on the top of your screen. Gaurang Shah, Jugal Patel, our experts today on the show are answering your queries. This question is coming in from Mr. Praveen from Coimbatore. Keynes Tech is the stock in concern. 3292 is the entry price, and he wants a short-term take with a stop loss. Should he hold or exit? Jigar.
In Keynes Technology, recently we saw some momentum, I think, in previous trading session, but overall there has been a very good support of 3000, 3050. So as of now, based on daily chart and monthly chart, I would recommend to hold and keep a stop loss of 3050 on daily closing basis. Overall, the chart is trying to, trying to progress towards upside because there has been a bullish divergence on daily chart. So as of now, hold and keep a stop loss of below 3,500.
Right, let's move on then to the next question that is coming in from Samrat Datta, who's writing in from Bangalore. He says he's holding 200 shares of Bharat Dynamics at a buying price of 463. He likes to know the future prospects for the long term. Coming to you, Gaurang, Bharat Dynamics, now while there has been a lot of positive coverage as far as the defense names are concerned, he's already sitting at a profit. What should be his strategy now? And he can hold it for the long term. So should there be any partial profit booking, or can he hold it on for a longer period and there can be further upside to this?
So Ankita, the way investing is an art in stock market, booking profit is also an art in the stock market. And the reason why you invest in the stock market, Kavita, is to make profit. You got it at about 430, correct me if I'm wrong, Ankita, and the stock is trading at about 1350. First of all, the investment price is very, very safe in terms of protecting the downside. Point number one. Point number two about the company, notes direct specific comments, but Bharat Dynamics happens to be one of the leading companies in the defense sector, playing a very vital and an important role for providing the kind of equipments that our armed forces require. Possibility of a larger order book from domestic market, and equal is the high possibility of export market, which will again add to the order book. Whether to book profits or not, it depends upon the investor's appetite. But like I said, the way investing is an art, booking profit is also an art. And whenever you get the kind of returns you are expecting, you should always try to book some part profits, take some money home, bring down your cost of investment, diversify into other sectors. No ways this is a recommendation over here, but I'm just giving you a strategy in terms of how does one invest and book profits in stock. But Bharat Dynamics happens to be a strong player. And like I mentioned, the level of investment is relatively comfortable.
Right, point taken, Gaurang, but let me also come to you, Jigar. What should be the levels to watch out for the next 1 year? I mean, clearly the entry levels is pretty safe, so that in that sense, his investment is safe, but should there be a partial profit booking? Because in the last 1 year, we have seen considerable correction. We have started seeing Bharat Dynamics to move in the last few weeks, but in the next 1 year, how should he play this counter?
In BDL, if we look at the chart since last 4 months, there has been a 3 to 4 times we have seen 1500 levels as a major resistance. Even in month of April, May, even in current month, it faced a resistance somewhere near 1500. So 1500 would be a very challenging level, and above that we are expecting a further all-time high in BDL. But overall, the good thing, currently BDL is holding 2023 trend line, and since last 4 months continuously taking a bounce back from that particular trend line. So as of now, partial profit can be booked at least 20-25%, and above 1500 we are very bullish on BDL, and at least we may see 200 2000 or above that levels from at least point of view of 8 to 10 months.
Okay, Bharat Dynamics, that's a take, technical take coming in from Jigar. But the next question is on BSE, and this is from Debashish from Bangkok, and buy price is 298, and yes, he wants to know if he can book partial profits. So Gaurang, there you go, partial profit book, and in fact profit booking is also an art. That's what you mentioned earlier. What would you recommend?
It really is very pleasing to see the level of investment and the kind of profits investor make. If you make the right choice, understand the sector, understand the company, ask questions before investing, and then get invested, Kavita. Look at this. You got in at 298, that is 300 levels. stock it at 3,884. You made decent amount of profits. So again, I'll repeat the same. Please, when you invest in stock market, if it is a good company and if it's giving you consistent growth quarter on quarter, 6 monthly, year on year, and the company's got a strong management, very sound business, but at least book part profits, bring down your cost of investment, diversify into something else. And like I was, like we were discussing earlier, sectorally, I think Indian capital markets is likely to do much better. Yes, there was a concern for BSE when the green signal in principle, we had the details of NSE IPO, but that's a tailwind positive. It is not a negative, Kavita. I think it has a lot of room for strong players to complement and coexist together and take the benefit of the growing Indian capital markets. Again, no specifics for BSE, but it's one of the strongest performers in the Indian capital market related sector. Like I said, your cost of acquisition, your investment price is very, very low. So that comfort zone is there. But common sense and wisdom should prevail to book regular profits and take home your profits and bring down your cost of investments.
All right, so that's the take coming in on BSE. I hope the question was answered. Let's quickly now slip into a short break. And Gaurang and Jagger, thank you so much for taking the time out and giving your answers to all the stock-specific questions. But with that, it's time for us to slip into a short break. Don't go anywhere after the break. We'll get you more updates on the market. Stay tuned. Welcome back. You tune into Buy Now Sell Now. We're getting you all the updates from the market, and Delivery remains confident of delivering 15 to 18% growth, with the CEO Sahil Barua telling ET Now that volumes have remained resilient in the current quarter despite the global uncertainties. The company says it will continue investing in capacity, robotics and AI while expanding its global fulfillment network through, though it has no plans to launch transportation operations overseas. Here's an excerpt that exclusive chat he had with my colleague Sumita Karir. Let's take a look.
It's been 15 years and really time flies. I think the biggest decision that we made, which is correct right at the start, was to say, look, we're going to treat Indian logistics as a whole as sort of the addressable market for delivery. Our focus has always been, how do we service all of our customers' needs? And over a period of time, I think that stood the company in good stead. We obviously started in e-commerce, which is where the biggest opportunity for us at the time was. But as we've grown over the years, we've expanded into multiple new services, whether it's part truckload freight or full truckload freight or warehousing. And that's sort of been one of the cornerstones of Delivery's growth, which is, when a customer has a logistics need of any kind, we have the wherewithal and the ability to service it. And the second sort of big decision that we made early in our life as a company, which really has been a long-term bet and continues to be one of sort of our core principles, is to build all of our technology and our automation in-house. Very early we said, look, the reality is for an Indian logistics company to be successful, it must have a product technology and data sciences base which is uniquely Indian, and we have to build automation and robotics for India. And specific to sort of the challenges that Indian companies face. So whether it's, building an addressing stack or a map stack like we have, whether it's building robotics for our sortation centers, those early decisions are things that over this 15-year period have really held us in good stead. But yeah, I mean, the story of a company over 15 years is really a series of very small decisions made over a very long period of time. So it's very hard to sort of pull only a few out.
Absolutely, and it has yielded returns, Sahil. But if I were to ask you to sort of, crystal ball gaze into the future, and what will be some of the decisions that you will probably take, or what is going to be the next leg of growth as far as Delivery is concerned, where do you see sort of movement happening, and how do you plan to grow from where you are today?
So four ways that we look at it. One, obviously, is continuing to penetrate industries that we've already sort of entered over the last 5, 6, 7 years or so, right? Which is really more of the same. Expand the network, continue to build capacities. High quality logistics capacity in India continues to be something which is relatively sort of less than the economy will need if we are to become a $5 trillion economy. So Delivery will continue to invest in building capacity. We will continue to invest in sort of building out, robotics capabilities, business development capabilities in different cities, expanding our reach, bringing in more truck forms. That's sort of what we've always done, and we'll continue to do that. That delivers sort of one leg of growth. The second is adding new services, compared to what we do today. So one example is, we launched Delivery cross-border, where we have the ability to do not just parcel, but also freight from India to the rest of the world and from the rest of the world into India. So that's a new service for our customers. The other is Delivery local, where, we were relatively underpenetrated in-city logistics. And now we're sort of expanding that service for, all of our 50, 60,000 customers that we have across the country. And we obviously continue to offer technology services, another growth lever. One of them is, warehouse management solutions, transportation management solutions. We've recently launched a map stack. So those are also going to be areas of growth. And the last bit will be sort of new verticals that we've historically not serviced. In India, for example, agri-logistics is a space that we've always sort of wanted to have a certain play in. So very large buyer of logistics services. We haven't done much in that sector so far. So that's another sort of new vertical that we expect we'll enter over the next couple of years.
Right. So, Sahil, you're talking about some very, very interesting points here. You've touched upon, your cross-border trade and, of course, the kind of services that you provide in that front. But you also started Delivery International for MSME exports. And that really comprises the kind of decisions that you've taken in the past couple of years. So when we talk specifically about Delivery International for MSME exports, what are the kind of orders that you're clocking on that front? And secondly, as part of this very question, when you talk about international arena and giving a boost to exports and, of course, enabling MSMEs, what are the kind of gains that you're seeing from FTAs, or do you expect to see from FTAs that India is sort of inking with multiple partners across the world?
Yeah, so I think in some senses it was fortuitous timing. When we announced Delivery International in December, and then, for example, the European FTAs have happened after that. Obviously, a reduction of duties is good for MSMEs shipping, for instance, to Europe. The US is still sort of relatively volatile, though we see quite a bit of volume going there. Our anticipation is that as the market for Indian products grows, providing this service to the customers that we have is opening up these new markets to them. Now, we do two parts of this. One is e-commerce, where they're sort of shipping directly to consumers, or they're shipping to retailers in these economies. We have the ability to enable sort of this seamless service for somebody who's doing domestic e-commerce with us or domestic shipping with us to now also be able to service orders from a consumer in the US or from a consumer in the UK or in continental Europe or Australia or elsewhere. The other, obviously, is in countries like the Gulf countries or Southeast Asia, you also have an Indian diaspora who wants to buy products from India. So again, our cross-border business opens that up for them.
Right, absolutely, Sahil. So when we talk about operating internationally, will you be considering geographic expansion into the kind of geographies that you are currently working from some of the other countries?
I don't think we'll ever put boots on the ground, Sumita, in any of these countries. So we're not going to go and launch transportation operations in other countries because we believe that, local players will have advantages that a delivery cannot actually match. But will we build over a period of time a network of fulfillment centers which enable us to have a base in those countries? I think the answer to that is probably going to be yes, as our shipping volumes go up. So operating in free trade zones, being able to warehouse in some of those countries and then link up with transportation networks who are leaders in those countries. That's sort of the strategy that I think Delivery will take.
Right, Sahil. So since we're talking about India's logistics landscape, well, that has changed dramatically. And changing the logistics landscape dramatically is AI. How are efficiencies being driven at Delivery due to AI, especially when it comes to your operations? And the kind of efficiencies that you're driving from AI, is that also reflecting in your financials?
To some extent. So I think where our use of AI is particularly large, I'll break this up. One is in internal operations, and the second is in customer and client-facing operations. On the client-facing side, what we've been able to do is to make it far easier for clients, for example, to manage a lot of the administrative processes that come with shipping. So today, if you're a customer, you can onboard yourself and start shipping with Delivery practically in minutes. You manage your tracking, you can manage delivery issues. For example, you can manage customer service almost seamlessly and very often without any manual intervention, either from a customer standpoint or from the logistics company. The other obviously is management of things like claims, returns, delays. All of this now is sort of becoming relatively automated. From an internal operations standpoint, the biggest users of AI for us, one is in terms obviously of how we route packages. But I'll leave that out because we've been doing that for a pretty long time. The other obviously is we're using systems to determine in-facility movement. So, if you come to our facilities, we are starting to replace human operators moving goods within the facilities with autonomous vehicles. Now, that is one area where we're using AI outside of just, control tower operations and so on. And the other piece is on geolocation and on maps, for instance. So those are starting to show up in terms of operating efficiency. So if you look at our margins, they've been expanding now quarter on quarter for a period of time. So that's sort of how AI is impacting financials overall.
Right. Sahil, let me also ask you about your financials since we're talking about financials. You closed 10,500 crores in revenues in FY26, which is a growth of 18% year on year. Now, which segments remain the biggest contributors to that, and where did gains essentially come from?
So the biggest gains, obviously, from a growth standpoint, were in our parcel and our PTL business, both of which actually grew pretty strongly last year. Parcel growth obviously was aided by the fact that we acquired Ecom Express, and then, of course, there was organic growth and share gain overall. And then on the PTL business, we've been the fastest growing part truckload network in India for a couple of years now. We're now, I think, the second largest organized player in the space. As we continue to sort of grow capacities, as we continue to grow our business development outside of the major, 15, 20 cities, we continue to see large growth on the part truckload side. Going forward, obviously, these businesses will continue to grow, but we also anticipate now future growth coming from our supply chain services business. We've gone through a period of sort of reorganizing performance in that business. That phase is now behind us, and we now anticipate that this business will grow pretty strongly as well.
Right.